Hi, this is Amur, editor of Spreadbet magazine, with a look at some bulletin board hero stocks on Thursday, the 10th of December. And I'm starting off with Amur Minerals, where you can see that there's been this gap to the upside through the 10 pence level. That 10 pence level obviously provides natural support there. That was also the resistance in June, July last year as well. So everything hinges on that in the near term. Obviously, we've come up a long way, and most people might be thinking this has gone too far, but there is a chance of 15, 16 pence while we hold the top of this gap at 10 pence. If you're more fussy about your stop losses, etc., maybe you could make yesterday's low at 11.02 pence your stop loss as you try and guide up the shares a little bit higher, or at least run whatever you have at the moment a bit longer. Next up is DQE Entertainment, which is not a stock I've looked at before here, but it does look very encouraging. What seems to be the case is we've had this final bear trap decline towards 5 pence in August, and since then really a reversal formation largely above the 50-day moving average at 9.63 pence. Yesterday was a close just through the 200-day moving average at around 11.5 pence. So that was helpful to say the least, and the view now is that at least while we stay above the 50-day line, the upside here could be as great as at the top of this trend channel from March at 25. Obviously, initial target maybe around 15 to 20 pence, which would tie in with the May-June resistance zone. Next up is a stock which looks like it could benefit from the latest bounce in the gold price, at least in terms of the name of the company. The excitement here really is that it looks like we've got a bull flag based with its base right at the 50-day moving average and the 10-day moving average shown here in green and blue, respectively. So this looks like a spike higher through this bull flag here, very similar to the action in Kibo Minerals just before it broke up through 2 pence, and obviously then went to 12 pence, and the rest is history. So looking very strong there. Maybe not get too carried away at the moment, but 6 pence looks like the target at the top of last year's trend channel. The stop loss and end of day close back below the 50-day moving average, 3.63 pence. Next up is a stock which was actually the best one-day mover of the year that I managed to pick out. I think it was up 72% rather in one day a few days back. Situation now is looks like we've got a mid-move consolidation here above the 20-day moving average at 0.3 pence, and the floor of this trend channel from last December at the same level. So that's the end of day close stop loss, double support there hopefully, and while we hold above that, we could go to 0.8 pence, which is the 2013 resistance line projection. If you're cautious, maybe you'd wait for a push through towards 0.5 pence just to break this near-term resistance and then go long. But it does look as though at the moment, as long as we hold 0.3 pence, we should be okay on Mediazest in terms of the upside scenario. Finally, a stock to watch out for. Looks like a sort of decent reversal pattern, sort of saucer shape here. You could sort of say it's basically like a sort of coiled spring ready to go. We've had this gap to the upside this week and holding above the 10-day moving average. If you're aggressive, you go long now with a stop loss just below the gap and the 10-day moving average, say 22.5 pence or below. Otherwise, maybe wait for an end of day close above 30 pence, which is this main neckline resistance here, which is obviously not going to be easy to break, but it does look as though, especially with this bear trap that we had in November below 10 pence, this is now ready to break to the upside. The upside would be 50 pence plus once we hold above 30 pence. That's it from me. More updates at spreadbetmagazine.com.